Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, May 14th, 2021. All right, we're going to start out here as usual with the major stock indexes. Certainly worth doing an update today on those, and then roll into some of the recently highlighted trade ideas. All right, so this is the S&P 500, and I'm going to flip over to some clean boards here. These have a lot of lines, levels, support levels, divergence lines, a lot of other stuff. So here's a clean, simple board, and showing the most, to me, what's the most important developments on the chart right now. That is the primary uptrend line off the March 2020 lows right there, and a breakdown the other day and a perfect back test. So updated this morning with the 60-minute charts bouncing back into those resistance zones. Bounce target zones is still, in my opinion, offers an objective short entry. And that was, again, on the 60-minute charts this morning. I'll get to those in a minute. But here on the daily chart, so you have pretty simple stuff. No guarantees it plays out, but all you can do is, take the shots when you see them in trading. Stick to the charts, stick to your plan, and that is it. A breakdown and a back test from below. I talk about this often. The thing about back tests, sometimes you back test for a little while, and so that's where we'll look at things such as those levels on the 60-minute charts to determine when that might be over, as well as even this daily chart. A big solid recovery back above the trend line. I'm trying to draw a box here and use a box tool to draw a candle. Something like that would certainly mean that the trend line has been regained and that this was a false breakdown. So those are the things I'll be looking at. Unless that happens, this is clearly a back test, and how we close today should be somewhat telling. I mean, they'd have to really run it a lot harder. We're up 1.5% on the S&P 500 to really change anything. So I don't expect a lot today. Of course, I will do an update if there's anything significant before the close today, but that's it. And also, as mentioned, you can see here we bounced right off that 50-day, which is often support. It has contained pullbacks and support. So let me just, to leave it here on the daily chart, tell you what I'll be looking for. As I said, that what would start to chip away at the bearish case would be a complete, a solid recovery back above this level, especially more than one day. And then to the downside, uber bearish, close to a 10 on a 1 to 10 if we get rejected and take out yesterday's lows. Why? Well, we have two major recent reaction lows there after the breakdown. That would also give us a rejection off the trend line and undercut, take out that 50-day moving average if we can close solidly below that. So a lot of important support right here, and those are the levels to watch. Again, that's yesterday's lows, just trying to draw a line there, and the previous days, Wednesdays as well. So you want to be safe, call it 404 if you want a number you're looking for there. That should do the trick. We'll do the same thing with QQQ. I'll leave it on my clean board chart, meaning we don't have all the other support and resistance levels, just the primary uptrend line, most important thing. And same story. We had sell signals on both QQQ and SPY recently with these breakdowns. Zoom in nice and tight, and you can see that trend line there. There's our breakdown candle on Monday. That's when the S&P followed suit after that the following day. So the Tuesday, Wednesday, and we're not even back testing yet. So there's room to go on the Qs if they want to back test. They haven't even gotten back close to that trend line yet. What they did do is they pierced through the 50, but the 50-day has kind of been traded more through lately, traded through, I should say, more so than the S&P 500. So therefore, when I see a lot of violations, it's not as significant. It is more significant again on the S&P 500 due to those clean reactions there. But that's it. Breakdown and a snapback rally, and then one more would be the small caps. To look at that, and there's your pretty clean chart here with just the uptrend line off the March lows and the recent breakdown as well. So like I say, there's nothing 100% guaranteed in trade investing, but these are the best sell signals I've seen on the daily chart in quite some time, many months. And that's it. So there's your breakdown, near back test on IWM, and then I also left on in this cleaner board, so to speak, this other trend line here, which I think has significance as well because we have a lot of reactions. And so what does that tell me? Well, again, break of the recent lows from Wednesday and Thursday. We'll take out those major reaction lows. Again, if we get a rejection here on or just before that trend line, and it'll also take out this trend line, which has enough reactions to make that valid as well. So big levels. And you can keep it simple. Even if you're not a full-time trader, you can just set alerts. Most charting programs will let you set a price alert. You just put a line there, right at or a little bit below yesterday's lows or Wednesday's lows, whichever come in lower. Set alerts, and if you get all three firing off, IWM, SPY, QQQ, that is an objective time to add to or initiate short exposure, or if you're a long side only trader like I've talked about, time you might want to consider stopping out or tightening up stops in some of your positions there. Okay, that's simple stuff. And the other thing too that I've mentioned recently is in addition, we had the bearish crossover on the PPO on SPY, QQQ, and everything else. And on that, I use that as one of many trend indicators. A lot of traders do. The PPO histogram will show you bearish crossovers. That's the PPO is down here, similar to a MACD. If you have a MACD, you can put it up. They're very close cousins. And then what you look for, what I like to look for, are a couple things. I look for these, what I call hills. A big green hill, that's when the PPO line is above the signal line and you have a bullish trend. Then after that, you look for the crossover, and you can see these crossovers come, and often when they come on the daily chart, they often signal the next correction. So you're in correction mode. Then you had a rally after that, and then you got a bearish crossover right about here, and you had a more correction to come. There's another green hill. Now, when you start whipping around like this, the lines are flattening out. These low bars here, those very small hills, or lack of hills, I should say, mean that the PPO is pinched. When it's flattened out, don't use it. Same with moving averages, things like that, and that's what happens in a slow grind. But then once you start to get volatility to expand like this correction right there, that's when these become effective trend indicators. So there's bearish trend right there. That's not the tool I wanted. I want the arrow tool. Bearish trend. You had a bullish crossover right here. You had a bullish trend, and most recently, boom, crossover right there, and that started this bearish trend. Now, the $1,000,000 question is how long will this red hill or inverted hill last? Is it going to end soon, or will it continue on? And only time will tell. But again, there's a potential for it to get much larger and deeper. And based on the price action, that's still the way I'm leaning right now. All right, quick jump back down to the 60-minute charts. This is the most recent bounce target zone I gave you earlier in the week right here, and we went about halfway or a third of the way into it, and that provided an objective short entry for that drop there. From that last time around, we were rejected from within the bounce target zone to about a little bit better than a 3% drop. We're there again, so nothing's changed. This still offers an objective area to add to shorts with stops somewhat above. That somewhat is up to you. Ideally, but not absolutely necessary on the NASDAQ 100, but ideally you want to see the Qs stay below that top of the zone there, about 327. It could go lower if you want to. You can draw a downtrend line here. This may be a downtrend line that gets some additional validity. So where will that take us? That takes us up here to about that 330-ish support. So I'm actually going to add that downtrend line now, because that's certainly a possibility. I mentioned just the other day that I've shifted over more towards the S&P 500 because the Qs, milked a good part of this down on the Qs, but I said, these are the market leading tech stocks. They're beat up. Dip buyers are going to step in and buy. They can't help themselves. That's what they do. That's what you should do in a bull trend, and they've been beat down. So as I said, the Qs were poised to outperform, and outperform means they can still go down, and that's my expectation. But to outperform means they go down less than the S&P 500. That's been my expectation for the last couple of days here, and you can see QQQ is down, up. I'm sorry, 2%. Yet SPY is up only 1.45%. SPY. This is a 60-minute chart, also back into that same bounce target zone from the other day that was laid out here. The morning we hit the 410.39 key support, we bounced back to hit it. Gave you several opportunities on that kickback to the bounce target zone to short. Had you shorted, and it was a bigger drop than QQQ from that point, we fell about well, it was 2.65%. So either way, a healthy drop. And we're right now, you can see smack in the middle of that bounce target zone, and that still provides us with an objective short entry. And again, ideally, you want to see the SPY is just starting to play catch up and just broke down. So I think there's a lot of meat on the bone on this one, and ideally you want to see it stay again above that bounce target zone, the top of that, which is that big gap from earlier in the week there. One other thing I wanted to show you, as far as especially to those new in trading and investing, and you talk about a 2% bounce in the Qs, and that follows yesterday's gains as well. Keep that in mind. And a 1.4% bounce in SPY. Might be saying, oh wow, that's just nothing but bullish. Not really. I mean, it depends. If you've done this long enough, what you look at here, I'm trying to find a clean board here on the 60-minute chart. Let me do here we go. All right, so let's talk about the bounce. Traders, including myself, will often use Fibonacci retracement levels to gauge a bounce where it might stop. And again, making the assumption, which I'm going off of, and time will prove me right or wrong, making the assumption this is a counter trend bounce or a counter trend rally within a larger downtrend with more downside to come. This is boom, 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 boom. Now, where we're at, I just put up these are the Fibonacci retracements. So if you go from the recent highs, which are the all-time highs in the SPY, to that low, yesterday's low, or the previous, was it yesterday? No, Wednesday's low. We are right around that 61.8, and if you look to the left here, I know these numbers are small and you might not see them on the video. I'm not sure if there's a way for me to make those larger, but that's 61.8, meaning this bounce has retraced 61.8, which is a key Fibonacci level. There's the 50, the 32.8. I leave these numbers up because this is typically the range from about that 38.2 up to about 61.8. It's a typical retracement range for a counter trend bounce. There are other Fibonacci levels. The next one up, you can turn it on 78.6, and that's way up here, right around the top of the gap, which also comes in with the top of that bounce target zone. Remember, my bounce target zone from earlier in the week, and it's still in play, is that gap right there. So there's the 78.6 fib just above. And then when we go to QQQ, even worse, tech, although today's rally is bigger in percentage terms, the overall bounce in the Qs is less. It has retraced less. In fact, we're at the very bottom, or what I like to say the minimum retracement, which is the 38.2. There's our high right there in QQQ. And there's the fibs down into Wednesday's low right there. And look at this, we're right at the 38.2. This is 38.2%. So there it is. We've only retraced a key retracement level, and that's the fibs. And I love to align fibs with price resistance. So you have a gap right there, major reaction low there, major reaction low there, major reaction low, and then reaction high, and that's where we're at. And then let's not forget my big level, which is right here as well. The top of the that correction right there, we had numerous tags up around that level, and we're just a hair above that. So bottom line is, there's a lot of resistance here in QQQ, and I have to say, as we start to power through here, like I said this morning in the update, that certainly chips away at the case, reduces the odds, especially a break of this downtrend line. But if we went up to that downtrend line, which is again depending on if and when we get there, that's the thing about trend lines, they're dynamic, meaning their price levels come in at different price points every day or even every minute, because of the slope. You have a negative slope on a downtrend line. And but let's just say that we hit it next week. Let's say Monday we pop up and we run to about 330. Let's see what that would do again on the fibs. That would take us right up to that 50% fib, which is just a run-of-the-mill typical retracement, 50% kickback right there, and that's right around that 330-ish level there as well. So that's where we're at. And again, the bottom line, what does all that mean? Well, same thing. This is a resistance zone, and it's typical for a bounce, as ugly as it might be if you're on the wrong side of it today. And there's all the levels there. And then, as I said earlier, yeah, it starts to chip away. You take out the trend line, then above that you're going to take out the 61.8 fib, and then this previous reaction high right here, and then that certainly whittles away at the case to be short. And again, based on where we got in with the Qs, you could stop out almost at a break even or a minimal loss. Again, it's, as I've talked about, trading's all about risk and reward, and keeping your stops relatively tight compared to your profit potential. Okay, other trade ideas. No particular order. I didn't even write these down, and I'm just going to highlight a few that I'm watching today that are moving. ETCG. This is Ethereum. Elon Musk's tweet knocked down Bitcoin and took down Ethereum with it, and all cryptos the other day. But it's just amazing how this trend line right here continues to act as good support. Look at how many reactions we've had along that trend line so far, and so yet another opportunity. We closed down on it yesterday, and that was another objective long entry. We hit it in the morning. I talked about that in the video, and then we popped up, ran all the way up here, and then we came back down, hit the trend line. Actually, we might have hit the 48 in the morning, one of the two. 48 is price resistance support, and we're back above it now. So basically another successful defense of the uptrend line on ETCG, and up over 27% since yesterday. On those lines, all the Bitcoin and all that stuff, all the cryptos are bouncing today, but and Marathon, which is a short trade idea, is up. But Marathon's offering an objective short entry add-on as well, because it's kicked back to that 24.37 resistance, and should it continue up to 28.93, we'll call that 29, that would still be an objective short entry there. There's a downtrend line that'll probably come into play. So this one still looks good and looks even better. You don't want to short yesterday. It's in no man's land, even though that breakdown did open the door to move to 16.15, the next target. Ideally, if you're already short, great, you hold on, but you don't add to it at that point when you're in no man's land. I call no man's land, that's what I refer to when a security is smack between support and resistance, and that's what it was yesterday. Now today we're back to resistance with even better resistance, both downtrend line or potential downtrend line and price resistance about 29 overhead. So those are your levels for Mara if you're in it or looking to get in it or micromanaging a trade. And then Bitcoin too. Now one thing you have to watch on Bitcoin, it snapped back above this 39.25 level, GBTC Bitcoin Trust. And well, we're right about on it right now. And I like to say this, the day is, although it's not young, it's 1:23 p.m. as I'm doing the video, so we've got a little bit, 2.5 hours left, a little over that in the trading day. All that really matters is how this one closes. And if it parks relatively close to the trend line, then that's just a breakdown and a back test. And I do still favor this target. I just want to make it clear, I still favor that. But at this point in time, since you're a little bit above the trend line, you'd probably better to hold off instead of adding to or taking a Bitcoin short. You want to see it get rejected and close back down below there. And just like the stock market, a break below yesterday's lows should open the door for the next leg down. And again, my next target is 28.16ish. Cover a little bit above that. Let's see what else. Okay, sorry about that. I had to take a phone call there, trying to remember where I left off. That's it. So there it is. Plenty of resistance overhead too. So pretty much, again, I'm viewing this as of now a back test, but we're a little hair above it. So and there's also some resistance there. So on Bitcoin, if you're wanting to short, you want to see a rejection. I think you want to see it stay below that 39.25. And if you're in a short now, you should be profitable, especially if you shorted back here on the first sell signal that I gave it back here. We hit that first target zone, bottom of the first target zone there. We've bounced. We've been moving around sideways, but you can see that right there is support just above all these recent reaction highs. And so if you shorted back here, I think that's of an objective stop. At this point, it would assure at least a small profit, if not a break even, and give you the opportunity to swing for a lot more on the downside there. In XBI, I did an update on that just recently. Remember, I had that all the way back here somewhere, calling it down and expecting a bounce off that initial tag of the 122.43, and that's what we have. So we do have, and that's also why the market's bouncing. Some sectors have hit support, and are bouncing off those support levels. And that could be it for the biotechs, but hard to say. I can't gauge how much. All I can tell you is if we break that low, it should open the door to that next potential target, about 108. And if we continue to bounce, well, I can tell you there's pretty big resistance there, about 139.59. So that's XBI. Which other ones did I highlight recently? Tupperware, same thing in that trading range I've talked about. You got to wait till short at the top of the range, cover at the bottom, or short on a break of the bottom. Semis, they're bouncing today in line with everything else, but still well below, they're still well below trend. If you look at a 60-minute chart on SOX and you put up Fibonacci's, they're so far the semis have only they haven't even retraced that minimum 38. Again, as much as the balance is today in percentage terms, this so far has all the makings of a downtrend. A downtrend is a series of lower lows and lower highs. So when does it start to call the downtrend into question? When you take out the previous reaction highs. And here's Peloton coming for a back test. Remember, this one broke down, gave us a sell signal on the break below 98.68. Moved about two-thirds of the way down to that first target there at 72, and is now back testing. So there's another one offering an objective short entry or re-entry here at about the resistance. I have it about 96.70 up to about 104.42. You have a confluence of key moving averages, the 200 days and the 50-day right up above as well. That should act as additional resistance. So I see minimal upside in Peloton and a very objective level. There's a downtrend line as well, so plethora of resistance overhead. And now, this one moves pretty big. You're talking about an 8-9% kickback if it gets almost 10, about 10 if it gets to the top of the trading range there, or the top of that resistance zone up about 104.40 or so, as well as the moving averages. So you just have to keep that in mind if you are trading this one, and position your size, put in the appropriate position size. What do I mean by that? Well, if you're going to allow a 10% stop loss, you need to know what that means in dollar terms, and you then take your position size down to the point where you can do that and not freak out if if they run it to the top end of the that bounce target zone, because anything much above that you'd have to pull the plug. And then as far as profit potential, if you short here, that first target is 25% below, and that second potential target's about 60% below, so that makes it pretty attractive risk reward. And again, stops should be in line with your price targets. Let's see what else I have. Oh, let me do an update on some of the commodities. Well, let's talk commodities in general first, then I'll wrap it up. I don't want the video to go too long. But the other day, told you as bullish as I've been on commodities, I said, look, they're likely to correct now with the stock market because they've been highly correlated, and we're at resistance. This is DJP, one I highlighted in the video the other day when we were right here at the top of the channel. I said it's easy stuff. When you go to price channel, you want to buy pullbacks to the uptrend line. That usually works. And you either take profits or start to tighten stops up if you're an active trader at the top, especially when you break these minor trend lines, the minor uptrend lines within the channel. And that's what just happened. So two things. So there we were the other day, and we gapped down yesterday below this most recent uptrend line. And if history repeats, we may work our way down to the bottom of the channel, and that's when I'll start being more interested in recycling back into some commodities, and post more setups at the time. Other ones I mentioned, somebody asked the other day for an update on corn, so I did it in the video. We were up here, and I said, look, here's what's going on. The trend's been resilient, but you have to respect these little divergences. 60-minute divergence right there. And I said if we pull back, and that's likely come back to this trend line, and I believe I mentioned as an objective buy point if it pulled back to the trend line, which it did, in that 674 470 level. But things changed today, and again, that kind of should have been taken into context. I don't know if I did it in the same video with that the fact that the commodities in that DJP, which is, by the way, I'm talking fast, that DJP I just covered that was at the top of the price channel is a all-inclusive, very diversified commodity. It tracks a commodity index with all types of agricultural commodities, crude oil, you name it. And so the fact that broke down with low trend, what that caused is it took corn down. So corn just broke down is what I'm trying to say. And although it was objective there, you should have had a tight stop. And even if it's not too late. That one, after the divergent high, it fell to support, but it broke support. And in hindsight, had I been covering it that day, or I might have covered it the day before, I probably should have made mention too. Hey, watch that DJP and all those other commodity ETFs that I've talked about. So that's what I'm seeing is weakness. A lot of these commodities breaking down. Lumber also same thing. Lumber had these minor trend lines here on this hourly chart, and this is one that broke down, and now it took out that more significant longer term trend line. So a lot of commodities lately are just in the last few days here starting to come under pressure, and that's fine. They've had a heck of a run. I still view it as overall longer term bull market action. I think there's a lot of hot air to come out of lumber prices, so I'll be looking again to recycle back into those and just be a little more cautious on buying dips, buying pullbacks to support until I have a little bit more confidence that it might be time to step in for the next leg up. Long-term investor, you might not want to worry. We might not come back down to the bottom there. We could head up there. The bottom line is these are in a strong uptrend. But if we do, again, that's where you have an objective entry, and then there's really good support down there on DJP around 23.33. And again, this can also be a proxy to just get an idea of how the commodities as a whole are doing, because you have them all in here: gold, crude, nat gas, Brent crude. That first one was WTI, West Texas Intermediate, corn, soybeans, copper, aluminum, silver, cattle, you name it, it's in there. Okay, let's keep this one relatively brief. We'll wrap it up here at the 26-minute mark. That's it. Indexes at resistance, both on the 60-minute charts as well as the daily charts, and with a little bit upside potential in QQQ if it wants to get there before it starts to take out some pretty significant support levels, as well as some Fibonacci levels that should, quote unquote, should contain the bounce. And if they don't, then that's a change of character, and at that point you either want to start scaling out, or stop adding to short positions unless there's something else in the charts that I've missed now. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.